If you're considering starting a business, you might be a little bit confused about how to set your entity up, which one is right for you. And when you form a business, it really comes down to two things. One, what type of asset protection do you need? And two, how do you want the taxes to actually be handled? Meaning, do you want the business to be responsible for the taxes, or do you want to be personally responsible for the taxes? Jared here, back with another episode of Minding My Money Mondays, the place where we help individuals and small businesses make my money make sense. In this first video of our three-part series, we're going to discuss the various legal structures, the protections that they offer, and then the pros and cons of each. In the next video, we're going to talk about how to actually form the various legal structures. So how do you actually go about mechanically setting up a business? And in the third video, we're going to talk about the tax implications and how to choose the structure that is right based off of the tax goals that you have. So the first thing to know is that when it comes to business structures, there are those which are considered informal and those which are formal. So let's start with the informal ones. So informal business structures include those which are sole proprietorships as well as partnerships. And when I say that they're informal, I mean that you do not need to go and set up any paperwork with, the Secretary of State or your state's Department of Business. You can just simply go into business. So a sole proprietorship is when an individual decides that they want to go ahead and start a business activity. And it can be as simple as, say, Jared has a cleaning service and I want to offer cleaning services to my family and friends. So outside of necessarily maybe getting a business license, there may not be any paperwork that I need to set up. I just simply go ahead and start offering my services. With a partnership, it is two individuals who just said that they are going to go ahead and carry on a trade or business. So that can be as simple as a handshake and just saying, hey, we agree that we're going to go ahead and we're going to start a cleaning service. So the good thing about informal business structures is that they're fairly easy to set up. They're also very simple too. So if things don't go right, they're not necessarily hard to dissolve. So that's another perk, is that they allow an individual to test a concept in a relatively safe environment, and they're fairly low risk. So if the business does good, you can always change your business structure. If you find out that, hey, maybe business isn't for you, it's usually pretty easy to go ahead and wrap them up and dissolve them. The other thing that's good about informal business structures is that they're pretty good if your clientele are people that you know. So if you're not dealing with individuals who you don't know or are in a different state, they can be very, very easy for you. So if you're not necessarily looking to create a brand or something that portrays a bigger image of yourself, then an informal business structure might be all that you need. For example, our company, Wilson Rogers & Company, we have multiple things that we do. So we offer tax services for individuals who need to file old taxes under our website, filedoldtaxreturns.com. We offer money management and courses and videos like these things through our site, makemymoneymakesense.com. So if you're an individual who is finding us on the web and you're in California or New York or something like that, having a corporation can be advantageous, because if an individual looks at it and says, who's running this site, and it's just Jared Rogers, they might have a certain perception of that. But if they look at it and they look at the bottom of the website and it says powered by Wilson Rogers & Company, it might be like, oh, this place is legit, they've been around. So once again, if you're looking to potentially create a brand image, then going with an informal business structure might not be for you. Now, the biggest downfall of informal business structures is that they do not offer asset protection, meaning that if an individual sues your business, they are essentially suing you. So I often tell people that you can protect your assets in one of two ways. You can either do it through a legal structure or you can do it through insurance, meaning you can just carry a policy that's big enough. Now, an attorney might say, yeah, that's one way, but the better way is through an actual legal structure. So if you're looking to protect your assets, you might not want to go with an informal business structure. Now, if you are looking for asset protection, you're looking to create a brand, or you're looking to build business credit, then we need to talk about formal business structures, which leads us to our next section. So the entities under formal business structures are actually formed with your state. And this includes limited liability companies, or LLCs, and it also includes corporations. So the good thing about a formal business structure is that it does give you asset protection. So if an individual decides that they want to sue me, say, for something that we did, they're not actually suing Jared Rogers, they're actually suing our company, okay? And the only thing that they hopefully or luckily could get if they were successful would be the assets that the business owns. So with an informal business structure, your house could be at risk, your car could be at risk, and if you don't want that, then consider forming a formal business structure. One of the other benefits of a formal business structure is that, once again, they lend credibility. So if you're trying to protect an image that is a little bit bigger, or you have aspirations of growing, having employees, creating a brand, then you may want to go with a formal business structure, even if the company only has one owner. So let's take a look at these two business structures, starting with the corporation. So the corporation is probably the more complex one to actually set up. And what I mean by that is that there's legal documents, you may actually have to have a lawyer involved. Depending on how big the business is and how many owners there are, there could be different agreements that have to be drafted and put together. So it usually is the more complex one to set up. Now, with a corporation, it allows you asset protection, but it does a couple of other different things. First, it allows you to raise capital. And when I say raise capital, it means you can sell shares of that company. And that allows you to have different investors. It also allows you to have different owners. It also allows for the ease of switching various owners. You might be familiar with this if you sell stock on the stock exchange. For example, you could buy shares of Apple stock and now you're an owner. Or you could sell shares of Apple stock and now you are no longer an owner. So it makes it very easy for you to change ownership. The other benefit of a corporation is that it potentially allows the transfer or the accumulation of money and profits easier than some of the other business structures. We'll talk about that a little bit more in part number 3. Now, the most notable downfall of a corporation is the fact that there is potentially double taxation. So the company is going to pay tax on its profits when it has them on its corporate tax return. But if the company decides that it wants to issue out dividends to the shareholders, they're going to end up paying taxes for those dividends which are issued. So let's go ahead and talk about the LLC. The LLC is complex potentially to set up, but it may not be as complex to set up as setting up a corporation. So one of the biggest benefits of a LLC is the fact that it offers the asset protection and some of the corporate benefits of being a corporation or having a formal business structure. Their biggest downfall often comes in the form of how the taxes are treated, or if you have multiple members. And the reason for this is because a legal structure is not necessarily the same as a tax structure. And we're going to talk more about this in part number 3. So when that section is ready and available to go, it'll be linked right up here for you. Now, before we get to our last section, I just want to say, having been in business for quite some time, that launching your business is going to take everything that you've got in order to make a success. So to help you out, we created a free digital download for you. 10 accounting and tax tips for startups and small businesses. To grab your copy, just click the link in the description of this video, or you can click the link right up here. We'll then go ahead and email that over to you instantly. And what we will also do is when our new course is available, how to set your business up from a legal and tax perspective, a step-by-step guide is ready, we'll make sure that you're notified. So the last section we're going to talk about is the special tax considerations. So meaning, when you set your business up from a legal standpoint, that is a legal structure. That is not a tax structure. A tax structure is how the IRS is going to tax a particular entity. But the thing to note is that with the IRS, almost any one of these entities, you can request to change the tax structure. And that's where an S corporation comes in. So the S corporation is an actual tax election, and it's often used by individuals who are looking to have best of both worlds, so to speak. They're looking to have some of the corporate formal structure, and they're also looking to have some of the pass-through tax benefits that come through with any pass-through entity. But the thing that is most important about an S corporation is it's often used by individuals who are looking to save or minimize their tax liability. So if you're looking to potentially save on taxes, then the S corporation structure might be for you. Now, in the very next video, we're going to go over how to form each one of these businesses from a mechanical standpoint, meaning what do you do, what forms do you file to go ahead and make that entity be formed. So make sure you come back and check us out for that one. If you like this video and got some value out of it, then please consider giving it a thumbs up, or you can buy me a coffee. The link is in the description of this video, and the extra coins go towards helping us produce future videos or do things such as buy gear and props. So until we meet again, let's all continue to mind my money, and I will see you all next Monday. Take care.